Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Monday, the 29th. We got month-end flows coming in. So much going on. Hold on here. I'm having an issue with my historical data here at NinjaTrader. I corrupted the data from the 26th. Let's see if I reload all historical data so I can show you a real chart here. Come on. Come on. You can do it. You can do it, NinjaTrader. I believe in you. In the meantime, let's go to the chart. Okay, now we're getting something. All right, so man, Friday. So you know, I didn't stick around on Friday. Normally, I'm sitting here watching all day. There was a little bit of bearish flow coming in when I had left, but then later in the day, sometime around like noon Eastern time. Really a little bit later than that, I guess. Some really strong selling came into the market. And then on the close, some really strong buying from all of the gamma and so forth came in and pushed us up to highs. Now, since then, we've kind of been down. And the big stories that we're getting right now is that there is a lot of forced flow here. So a large private fund, Archegos, blowing up here. Goldman Sachs, one of the first to margin call them, and now everybody else following. Some of these banks taking big hits. Some of the names that they were in, like Viacom, taking huge, and I just mean absolutely nuts, crazy, huge hits. All right. Over here in the treasuries, there is some suggestion that into the month end that we should get some forced treasury buying as quarter rebalancing comes in and they are forced to sell stocks and buy bonds to maintain their required mix. Okay. So we are seeing maybe a little bit of buying. I don't know. We'll see how that one goes. Over here, oil maybe pulling itself out of its kind of slump here. It does sound like they're about to get that ship going. They've partially refloated part of it, so that's good. Over here, gold and silver still just kind of going sideways and not doing a whole lot. Silver's still looking kind of under sell pressure though. And we got copper. Well, copper had a really good day on Friday, but so far it's just kind of going sideways. So, see this right here? It's not giving me the data I want. Kind of lame. Anyways, and here we got the dollar. The dollar kind of going sideways, but still holding. I mean, especially from we got like this stuff from the 23rd. There was some strong dollar strength over the weekend, and it just kind of holding here, I guess, is a good news for the dollar, but maybe not good news for anything else, right? Good morning, everybody. See you guys coming in here. Let's make sure that I got my my sandal right here. So what's our strategy here? Well, I think that this is a situation where our read on order flow could be really good. So I want to try and read the flow. I want to try and go with market orders. And I want to take my profits quickly when I see the absorption, because what you're going to get is you're going to get large meta orders coming through, and the book is going to have to rebalance. And you might get the flow going the other way. Like, especially now that everybody knows that this is going on. If you're one of the guys that have to buy the gamma into the month end, you would want to wait for the guys that are doing the margin call to be done first. So you might see this kind of a really quick back and forth, right? Okay, so let's just read through Twitter here, see if there's anything else I can pull out of it. Archegos. Margin call stocks rebound as forced liquidations fade. Oh, and there's also some question about how much is left. Are they all done or not? So when you get a large meta order, if they're being risk adverse, and in this situation, I think that they would be risk adverse, they are going to sell half of it at the first. So when you see the initial move that is like obviously something, that's only like half of it. That said, that other half may, how much of that have they done? I don't know. May already be done. Oh, we didn't turn on the text to speech. Let's do that. Morning, Bill. Need to blow my notes. Hold on. I'm guessing you wouldn't buy Teamy, Baidu, or Vips today then? Well, I don't follow any of those stocks. So let's say my policy is I don't want to necessarily give specific calls on individual stocks. There's a lot of problems with me doing that, in particular that I don't necessarily consider myself a stock picker or a fundamental analysis guy. I could certainly do it and I could get into it, but I don't make calls. So it would depend on what you think the fundamental case and the fundamental valuation for these individual securities are, and whether or not you think that they're still good companies or not. I did see here on just on Twitter here. Did you where was it? It's not there on Twitter anymore. Well, there was one. Oh, there we go. GSX Techedu gets double upgrade as Citi says the sell-off is overdone. This coming from Bloomberg. So there are some people out there that do apparently believe that it's overdone and you could buy some of these. There's some of these like Viacom, man. Holy crap, that thing got decimated. And they were up big, and you kind of have to wonder how much of them being up was from this margin, right? And here's the other issue we've got to keep in mind here. Sorry, I'm a little still damp from the shower. we've got to worry about secondary knockoff effects too, right? So I think that the financial system is much better prepared to deal with this sort of a thing. But obviously, not everybody is doing well off of this, right? Goldman Sachs, they said it's going to have a minimal effect on them, and they got out. I mean, they were like the first ones. Not surprised. I still believe that they have the best tech and the best traders, and so makes me feel good about my Goldman Sachs play, but which I do own. Is there any place to find how index fluctuations are calculated? I'm not quite sure what you mean by that. You can look at what the weighting of them all are. You want to like calculate the index itself. You want to look at the weightings, right? Look at that's Discover A, right? And Via C side by side both peaked around 319 different PE. Yeah. So anyways, there's some of these guys like Viacom that they're up so much, and they're like, I think Viacom dropped like 50%, right? So they went down, and then this morning you had some of these banks went down, right? Like I think Nomura was one in particular that got hit really, really hard. Okay. So you've kind of got to think, okay, so all of these guys, they have to deleverage in certain places. Does that selling then trigger other margin calls? Right? So like Vlad said, how leveraged is the rest of the market? And I kind of look at this and I say, is Archegos really the worst offender? They're really the only one? I'm sure that there is a lot of margin money in this market, right? That being said, they had a pretty big sell flow come through, but I'd say that the damage to the index overall has been minimal. So that one is really hard for us to know, I think. But that's where I'm saying that, if it's a forced flow, I think that during a forced flow, that your order flow read is going to be really good. All right. And just remember, we're looking in that situation, we're looking for large meta orders, right? And if it's a risk adverse large meta order based on the Algrim-Chris model that they're probably using some derivation of, when you're being risk adverse, it generally results in the majority of your meta order taking place at the beginning of the time frame that you're going to be liquidating over. Okay. Which means that the strongest impulses are going to be the first ones. And what we're going to get from here on out are going to be less, assuming that there aren't other people. But if we start to see other large meta orders coming in and selling, then we know that we're starting to get secondary effects, right? That's the way that I'm going to try and play it. Now, conversely, the other thing that we could do, though, is just watch the treasuries here, right? So I actually like that right there. Let's see what they do. Finally seeing a major market call, plus the market being above the dot-com bubble in valuations according to the Buffett indicator. I'd be cautious and wait for fear to be greedy. Well, there's a lot of different ways of looking at that, right? I've seen so many different valuations. Do you see that thing where who was it? I don't remember who it was. I think it was somebody like Jim Simmons or, one of those legendary hedge fund guys who a lot of their earnings or profits have come from, bubbles and so forth. And based off of all of the valuations that he was looking at, he saw many indicators that he typically look at that said that they were overvalued, but there was a couple of other ones that said that they were not. So the general conclusion that he made was that we could continue going up, but that there was cause for concern, that they needed to watch it. So I don't know. Isn't there a reason for people to sell anyways? This market is tricky, and we must be ready to sell off in common English terms. Yeah, but I mean, there's this other big caveat. Let me put it in this terms. See that last bar there on Friday? Yeah. That's the one you got to watch out for. So even with all of this first Archegos selling, is that how you say it? Archegos? That's how I'm going to say it. Based off of all of this forced flow, there was still people buying, presumably on Gamma, that well canceled then out. And remember that if you have two large meta orders, one, let's say that there are 1,000, I don't know, 1,000 is maybe not large enough of a meta order, but let's just say for the sake of argument that it's 1,000 contracts, okay? 1,000 contracts sell and you get this move down because of that, because of people following that. And then after that, you get 1,000 contracts buy. What should you expect to see happen? Because the book has been disrupted, it is going to go higher in the end. And that is what I think you saw there on Friday. And that's why I'm saying that if it's forced flows and everything, if you see the orders come in the other way, we should probably just get out or order reverse instead of trying to let something run. Right? And are there other reasons to sell? Well, there are some people that are going to have to sell stocks and buy treasuries, but there are other people that are buying stocks because of Gamma, because they just like let all of their Gamma expire and now they're going to leverage their Gamma back up. Right? There's a reason to sell always because market on Friday could have made false move on options. Sure. Or no, there's a lot of unknowns in this situation. But that's why I'm saying that I think that you could get some good order flow reads in this. So far, though, it looks like E-mini pretty quiet. Heading down, but overall pretty quiet. It was this slow in Globex on Sunday, really. But there was some, like Nomura and these guys, some of the other European players that got hit. Like I was reading here, where is it? Oh, that one's the story about it coming back. Prime brokers pounded. While the actual loss number was not defined, estimates pegged it in the 2 to 3 billion ballpark. And one commentator said that, quote unquote, Credit Suisse lost its entire year profit because it was outsmarted by Goldman, aka the sharks on the street, and by a one day. I think that was translated incorrectly, but I guess they're saying that Goldman and them beat them by one day. So all of the guys in Europe that didn't have the chance to liquidate because Europe was closed got screwed. Do you know what percentage of the major indexes are traded by algos? Well, it's a very high percentage of the volume. It kind of depends on how you want to play that, but a very large portion of the volume is algorithms, right? But yeah, I would think it's more complicated than that, and I don't think that it's really something that I would concern myself too much with. So I'm just watching this video stuff going on in Portland this weekend, I guess. I was not as up on the news this weekend as I normally would be because I was watching the baby. So I really wish that I had been recording when these really big flows came in. Oh. Oh, man. I don't think so. This guy, he was his car was being assaulted and he was out on the ground and people were kind of attacking him. So he pulled his gun out and then a police officer saw him and told him to get on the ground. And I'm thinking back, I don't know what the rules are for that. I don't think that it was legal in that instance for him to brandish his gun. ETFs are rebalanced by algos, so I would imagine a lot of the market is algos. Well, yeah, a lot of it is algos. It's just he wasn't arrested. He was allowed to leave. Okay. Well, I mean, I think that in that instance that the police did the right thing, but I'm wondering what are the rules on brandishing now. So I'm just thinking about this, and I'm like, I remember reading stuff about this, but I don't remember what the conclusion is. Rules on brandishing gun. Nine things you should know about brandishing a firearm. It can be a serious offense. If you were not doing so in self-defense. Okay, he's met all of these other qualifications, but then the question is, was he acting in self-defense? I've watched so many hours of footage like that. I'm feeling sorry for Trump supporters that get pummeled by Antifa a long time ago, basically show up as targets and they don't pity that bullshit. I don't listen. I think that if a group of people decide to have a public demonstration and counter protesters come up and create violence, I think that we should be condemning the violent counter protesters. I just, come on. Because if we were to take that, if I were to take the same position that you are there, then no conservative would ever be able to publicly show their opinion. And I don't think that that's right. I think that if somebody, everybody in the United States, regardless of what their opinion is, has the right to be able to peaceably express their opinion in public without fearing for retribution. And I think it's absolutely disgusting, this thing that people have normalized where you go out and you counter protest and try to beat the people up and so forth. That's not okay. It's absolutely abhorrent. Would you move to Switzerland so you could pay 0% long and short-term capital gains? Anyways, let's see here. You will have to prove the elements of self-defense to be exonerated of brandishing a weapon or firearm in violation of PC 417. This is Eiseman. So I don't know which, this might be a specific state. So we would also have to look at the law in Oregon. But you reasonably believe that you or another person were in imminent danger of physical harm and you fought the person who threatened you with only enough force to subdue that person or otherwise defend yourself. If you can show that the victim misinterpreted your display of the weapon or that you drew or brandished it just to show it off, to educate someone, or were mimicking someone, then this element is lacking. These guys have like pepper spray pointed right at him and they hit him with something. Okay, so he got hit by something. He got hit by something and then he pulled it out. So, I don't know. That one's interesting. Antifa is allowed to do what they do. Conservatives are not allowed. I don't know. I don't think that you just give up and then say, okay, I'm just not going to say anything. I'd rather die. I'd rather die than be forced into silence. But there is a thing in Portland where it's like they don't seem to hold Antifa to the law very well, and so they just continue to run amok over there. And these guys were like these Antifa guys were like dressed in riot gear, like. If conservatives are only willing to be struck and not strike back, what do you think is going to change? Well, no, I think that. So if your opinion is that the Trump supporters should be going out there and be getting violent, I think that that's the wrong take. Because if the Trump supporters go out there and get violent, then it would reflect upon them negatively. Like, it is the problem with Antifa. The real issue with between Antifa and the Donald Trump supporters is that the Donald Trump supporters are identified with a specific politician, whereas Antifa is not. Right. So Antifa can do almost anything that they want and misbehave, and there aren't really severe political repercussions to anybody else. Whereas if a Donald Trump supporter comes out and does something, it reflects poorly on the entire Republican Party. Right. So I think that if you just continue to speak out, though, I don't believe that these guys win. No. Because eventually the public is going to, well, I think the public already is fed up with it. Like, the thing is that the public was fed up with it, and they're like, this is all just because of Donald Trump. But now it continues, and people have to start going, oh, maybe Antifa is bad. Right? Conservatives think that conservative violence is their religion. Well, no, but the people have the right to defend themselves, for instance. So in this case, if a guy had been struck with an object while he was out looking at his car, I believe that you could make a strong legal argument that he believed that his life was at risk and that it was justified for him to brandish his weapon. That's what I'm kind of trying to suss out here, but it's kind of hard. We'll have to see. I'd have to see a lawyer. I'd have to see let's see, reddit.com/r/ I don't know, Reddit lawyers. I forget the name of the subreddits over there. r/lawyers, r/law. Well, I don't see one. Maybe I should make a thread. Wait, hold up. Well, that is old. This guy says that there is no law against that in Oregon. Okay, so I took along there. I took one contract. It's moved quite a bit against me. I'd say it took a reasonable amount of flow to make that happen, though. Interesting. Let's just puke. There's a time where we can load up as it goes against us and everything, but I don't think that this is that. Any person over the age of 12 years who, with or without malice, purposely points or aims any loaded, empty pistol, gun, revolver, or other firearm at or towards any other person within range of the firearm, except in self-defense, shall be fined upon conviction in any sum not less than 10 K, no more than 500, or be imprisoned in the county jail not less than 10 days or more than 6 months or both. Justice courts have jurisdiction concurrent with the circuit court of the trial of the violations of this section. When any person is charged before a justice court with a violation of this section, the court shall, upon motion of the district attorney at any time before trial, act as a committing magistrate, and if probable cause be established, hold such person to the grand jury. It looks like the market is holding its breath. Well, I think the issue here is that the big thing is what the equities are what forced flows are going to come into equities. And I don't think that you're going to see activity in that until the U.S. equities open, because the Europeans already did what they had to do. So, they're just going to wait until they open. Well, this law right here is at recent, it looks like. So maybe when that guy posted that other post that says that it was legal, it was a different thing. Maybe it was a different thing. So short American banks since the Eurobanks dropped? No, well, I don't, not necessarily. So for instance, Goldman Sachs. But this is the best example here, right? Goldman Sachs has said that they already de-leveraged and that it will have a minimal impact on their money, right? They've already said that they basically got out. There could be some other U.S. banks that are holding stuff. I don't know. Nobody knows. That's the problem. Who trusts what GS says? They lie through their teeth all the time. So give me an example of a situation where they said that they had lost a certain amount on a trade or leveraging, and it turned out that they were lying about it. Man, does it come back as soon as... What is Archegos? So Archegos is a large private fund that was buying a couple of stocks such as Viacom and basically they were involved in media companies in the US and Chinese tech companies. And they were using large amounts of leverage to do their transactions. And basically, they've been margin called. And so we've been seeing some selling in the market as all of those brokers and dealers and stuff that are calling them on their margin have to sell those stocks. I don't mean to get all over you, Etherator, about saying that GS lies. I'm just saying that the way that the internal workings of the bank work is not what the majority of retail traders think. And so a lot of things are said about what is going on in the banks that if they really understood how things work, they wouldn't say. So, for instance, people say, oh, yeah, Goldman Sachs just upgraded or downgraded somebody. That must mean that their desk is, going and doing the opposite thing and front running everybody. Well, those two divisions aren't allowed to talk to each other. There are large regulations that put up a huge wall, and Goldman Sachs puts those analysts in different cities so that they can't talk to anybody else at the firm. So to say that the desk is doing the opposite thing is kind of silly, because the desk that doesn't do anything. The desk just carries out trades that other people are carrying out. They execute for other people. And and so they're just doing what the other people are doing. So if Goldman Sachs desk takes a move contrary to what the analysts are doing, that just means that there were other hedge funds out there that disagreed with the analyst, right? Has a history of its traders inside trading? I'd say no. So what has happened in the past is that they have done some deals that they probably shouldn't have. That's what's gone over at Goldman Sachs. But insiders trading, no. At Goldman Sachs, employees are not allowed to hold stocks. Then for short-term trades, if you buy a stock, you have to hold it for like 6 months, I believe it was, unless it falls 20% on you. So they basically they have rules set up so that employees cannot trade off of it. And like I said, all of the execution that they do is execution in behalf of other people. They'll come in and they'll say, okay, we want to buy like 5,000 shares, or we want to buy 10% of this company. And then they go to Goldman Sachs, and Goldman Sachs executes it for them because they have the algorithms and the expertise and so forth to minimize the market impact. That's what they do. So to say that they're like insider trading against it is kind of silly when you put it in that perspective, right? They don't have any prop desks. So if they're insider trading against it, it's just because they're executing for somebody else. That's also where Goldman Sachs coming out and saying that they've pretty much already taken care of it and that they're going to take a minimal loss from it. If that statement comes out and turns out to be materially false, then that would be market manipulation, and then they would get hit for that. So I would be very doubtful that they still have this huge position to unwind, and they're saying that. They're not stupid. They wouldn't do that. You only come out and say something publicly about it when it's all done. How often are the employees' books audited outside of GS? Well, so that's a good question. So you're saying like if somebody had another account open somewhere and they were trading on it unbeknownst to Goldman Sachs, right? Seems it would be very difficult to pull that off, but with the way that they do it. Because if you were to open up an account somewhere else, I think that they would know almost immediately. Actually, I don't know how they do that, but I do know that they check that stuff. I suppose it's entirely possible that would be happening. But here's the second part is because of the way that the culture there works and everything else, it'd be extremely unlikely to see that sort of a thing. It'd be extremely unlikely to see that sort of a thing because the employees all believe that the reputation is very important. So you notice that all of the situations where Goldman Sachs has been knocked for something, the employees were all doing something that they thought was kind of like within the rules. That's kind of the funny thing about it is that they thought, it was those situations where it was like, well, the rule doesn't say that we can't do this. And then they did it right. But if there's like something that's like explicitly prohibited, you can't have an account outside of the approved accounts that they have. And, the limitations that they have on what you can trade and when you can trade and all of that stuff. The employer is extremely unlikely to break those. Well, and that's where I would say, like, when did this happen? When that was a thing? Because you kind of, yeah. Actually, when you think back on it, like, oh, the shipping container has been freed. Suez ship refloated and straightened up. Okay. The ship is really moving now and horns are blaring in what sounds like celebration. Stern has swung away from us and it looks like it's really facing the right way now after hours of being jackknifed across the channel. Woohoo. Okay, cool. So we're like, officials haven't come out and stated that it's up and it's going and everything else like that, but the media is reporting that it's moved and that it appears to be fully floating again. Okay, now the officials are saying that the traffic is going to continue through the canal. This is good. Who does that affect, though? Well, the market's not really reacting to it at all. I would think that it would affect oil, right? Yeah, maybe oil already kind of, I don't know. This has tanked the meme economy, right? That was the Suez Canal Authority chairman has said that the channel flow returns after stranded ship refloats. Oh, really? Whatever floats your boat. Oh, guys. News Squawk tweets, everyone's saying the banks aren't using prudent risk management, but when McDonald's decides to start selling processed baby back ribs in a sandwich, you all look the other way. Oh, man. There you go. Wynn's got it. That's the story.
Winston's mom says Nomura and Credit Suisse warned on Monday they were facing big losses after a US hedge fund, named by sources as Archegos Capital, defaulted on margin calls.
So the whole question, the whole thing that the market is waiting on here on the open is if there is more selling from these margin calls or not. In addition to month-end flows, there's a lot of question about the month-end flows, which are expected to be large. That boat is going to ruin your short? Well, I don't know if tactically this is the best place for us to be looking for a trade anyways, right? Because it's kind of at a support level. Not saying that that means we should be going long or anything. I don't think that it means anything. It's just kind of like a spot where I'm kind of like, well, I don't know if we can really make a call. Especially with how quiet the market's been pre-market these days lately. How many double positives do I have to give, huh? Ooh, is it the other one going to get filled? Oh, the first day of Derek Chauvin's child today? I'm sure everybody will be perfectly rational and calm about it. The war is coming. So, you know what I've been reading about a lot, and I've kind of been wondering, is this just media sources getting me all excited about something, or is something really going on? And I see it the most from Zero Hedge. And that is signs that the United States and China are headed towards a war over Taiwan. And I'm seeing many reports from numerous sources that suggest that China is just absolutely, what is the word? Ideologically committed to taking Taiwan over, and that it could happen in the next 3 years. That they're working towards it, and that they're almost prepared to do it. The whole thing is just kind of freaky. Taiwan, they make our semiconductor chips. Well, they are one of the factories, one of the largest producers of the advanced kinds of wafers that a lot of the manufacturers use, yes. Mighty says China has no army. They've been building up a large force, though. I don't know, man. That's why I'm like, it seems really hard to believe that they would really go and do that, but we're getting warnings from the State Department and all of this that's going to happen. So it's like the war is coming. Yeah, it's like kind of, because if that happened, it would make everything else that we've been living over the past year or two seem irrelevant. Don't you think? Don't you think? Does China have nuclear? Yeah, they do. China has been positioning carriers. Well, they've been building out their navy quite a bit, although the majority of their ships that they're creating are small ones. But some reports have suggested that at the current pace, that they would become a larger navy, more powerful navy than the United States Navy within 10 years. Because you got to understand that one of the big issues for China in terms of being like a superpower at the moment is that they don't really have the ability to project power. They can project power regionally, but not around the world. The Taiwan situation is looking like the modern day Sudanland. Yeah. Well, and one of the things that I've seen reports on as well is that kind of get interesting is that China is very much pushing this propaganda line that it's like the East versus the West, and that the West is targeting Asians and committing violence against Asians, and that China has to stand up for the East and protect Asian citizens worldwide. Right. Yeah. Like that's a thing. And then you go and you look at all this stuff that's been going on. Like the media has been pushing this whole thing that there's been increased violence against Asian Americans. But when you look at the statistics about it, it's kind of tells you that the situation isn't quite what the media tells you. And, you kind of wonder, like, is this being pushed because of China? So I honestly suspect that a lot of U.S. media corporations are being gullible and pushing Chinese propaganda unwittingly. Because I've certainly seen a lot of things pushed from the media that seems to be in line with what China would like to be said. And then China comes out and starts pushing stuff that's like exactly in line with those narratives. But when China does that afterwards, everybody just kind of reads it as, oh, well, they're just reading the U.S. media and trying to take advantage of it in whatever way. It is a conspiracy theory, for sure. Because what kind of empirical evidence do we have on this? Well, we know... I wish I could find it. How would I find that story again? Well, we'd have to go back and I can show you the piece of empirical evidence that I'm basing this off of, right? Here we are. There you go. Okay, so what I'm basing this off of is the Global Times said everything Washington talks about is centered on the U.S. and on white supremacy. That's from the state-sponsored news outlet is what they've been saying. On March 18th, the Global Times ran a piece titled Elite U.S. Groups Accomplices of Crimes Against Asian Americans. Right? So the piece of empirical evidence that I'm sharing here is that the Chinese media is pushing that line. And I'm just saying that the U.S. media over the past week or two in particular have also started to push that line. And so I think that you have to wonder how much of that is just them coincidentally pulling up on the same thing, or if some U.S. news outlets are being influenced unwittingly. The Global Times is a daily tabloid newspaper? No. It is like these state sponsor under the... Well, you get that it's under the Chinese Communist Party's flagship daily news, but it is... I mean, if you want to understand what the Chinese government thinks about something or the narratives that the Chinese government is trying to push, you look at the Global Times, right? That is from your wiki? What are you talking about? China and Africa, King Lake. Well, look at the places where China is trying to have their allies at, right? Yeah, they do want it to be Western countries versus everybody else. Hate crimes against Asian Americans surge in U.S. Yeah. Well, it is going up. I don't think my understanding is that the degree to which it is going up is not as extreme as some people are portraying it. And who is perpetrating that violence in particular is not what the media is portraying it. But I digress. But you kind of have to put that in perspective too. Is the military is telling us that China wants to take over Taiwan, and China has been pushing these narratives. Is there any name for your trading strategy? No. Are we still on the YouTube algo podcast? Oh yeah, that's a good question. One of the big things is that I suggest not finding some popular strategy out there to follow and mirror. That if you're going to be successful at trading, generally speaking, it's going to be because you've developed your own strategies and found inefficiencies that the rest of the market is not aware of. Nope, it shows up now. I think that the being not showing up in YouTube was like a one-day thing. China's our worst enemy. I'm glad you guys are awake. Well, this is the thing is I don't know if there's actually something's gonna happen. I certainly think that there's enough showing up from reliable sources to suggest that we should be concerned about it, that we should be paying attention. And one has to wonder if China invaded Taiwan today, would the U.S. respond? And I believe that they're supposed to. But I personally am not confident that they would. If China just came through and just like blitzkrieged it, then I think that everybody in the U.S. would be like, oh, well, nothing we can do now. I think that's what would happen. Why few likes? Oh, only 11 likes. I don't know. Yeah, we're usually a little bit higher than that right now. But you hit that like button. Helps the channel out a lot. Thank you. Yeah, you do have to realize that like the peak of the stream is around 7:45, so. How do you trade? Can you explain so I don't completely explain my strategy, no. So I will tell you that I spend a lot of focus on reading the tape. Or reading order flow. And okay, so here the E-mini on a pretty good tear long. Let's see what the opening flow ends up being. Not a strong set of orders just off of the open. Okay. Buyer's turn now. His strategy is talking to his Jerome Powell voodoo doll made from sweet potatoes and chives. Let me just back up. Nah, because I think that you could learn a lot from us, KG, but you're asking the wrong question. You're asking the wrong. I'm not going to answer that question. I don't reveal the full brunt of my strategy, but what I do reveal is I reveal a lot of proven market behaviors that may help lead you to it or to similar strategies, right? So let's think of it like this way. Let's just, for the sake of argument, because I don't post my results. I was looking at the Ninja Trader, like, for being part of the ecosystem. And it was like, if you post your broker statements, or like any performance metrics, you have to update them every 90 days. I'm like, oh. And there's all these other rules about it. So it's kind of not a good idea to talk about performance directly. So you could just assume, hey, maybe he's not making money off of it. Maybe he sucks at trading, right? But maybe he sucks at trading, but there's something that he actually does know that can help me, right? Well, how would you know that the piece of information that he's given you is good or not? And my argument is that you should look for empirical evidence that the market actually does perform in a certain way. And that's what I try to provide you guys. So the one that I would highly recommend looking into is the square root law, which is that the impact of a large meta order is equal to a constant times the square root of the size of the meta order over the volume traded during the time frame. And it follows the square root law. That's an important empirical fact proven about markets that is consistent over markets and has been shown, or that there have been models that are able to find a square root impact, which is to say, like, they found how the order book may potentially be leading to that behavior. It doesn't necessarily prove that that's why, but I'd say pretty good chance that that is why, just because of how effectively the model shows what the market does. Okay. So that would be one. So what we're doing right now is we're watching the market for signs of these large meta orders. Well, I got long there in the treasury trade sim order, and it's been a long time since I've had to like really bail on one of these, but I'm going to say that we have to flat. So 500, the limit there. So kind of interesting that the treasuries are selling. So it looks like the move that I was looking to see happen in the treasury not coming through, and in fact them falling at the moment. And it's unclear to me why, or if that will continue or what. It actually kind of looks to me like they're selling treasuries and buying equities. Well, we did get a good trade in the E-mini there. So a little bit of distribution, so I'm okay being out. Markets mean revert when price moves beyond 2 standard deviations. I think that is. I'm going to challenge that one a little bit. How would you verify that? Because if I look at 2 standard deviations and I qualify that by saying, or I test that by looking at a Bollinger Band, and I would say that I have not been able to prove that behavior through a Bollinger Band. Or like a volume-weighted Bollinger Band. If price moves beyond 2 standard deviations, it's probably fat tailing. Yeah, there is skewness to that, for sure. Let's see if it keeps going up. Well, it's a lot of volume trading right there right now. Yeah. Well, EKG, you got to remember that trading is competitive, right? So if you go out and you use the same technical analysis indicators that everybody else is using, how are you going to have a competitive advantage and win? Right? Everybody's using RSI these days. Is there any reason you don't use TradingView? Well, because TradingView isn't optimized towards futures. It's an okay charting platform if you pay for it. I do tend to, when I want to look at larger charts, or I want to look at stocks, I usually do go over to TradingView. What is mean reversion? The idea of mean reversion is rooted in a well-known concept called regression to the mean. Yeah. But that's why I said Bollinger Bands. Okay, so even though there's the distribution and everything, they continue pushing here. Could maybe have bought it there at 59. Talk more about China. I don't know what else to say about China, man. I would hope that if something happened that it wouldn't be like an all-out war with China, but that it would be more like a Cold War like it was with Russia. Oh man, look at the treasuries just getting creamed. Copied from Decoding Markets, this is a theory first observed by statistician Francis Galton, and it explains how extreme events are usually followed by more normal events. Yeah, we'd have to see how they quantify it. The dollar's not reacting with the treasuries. Yeah, I don't know what's going on here in the treasury, man. The move in the treasuries is a little freaky. It is certainly not what I expected, so I think that I just have to take the loss on the treasuries and not trade them anymore today. It's okay. I had some really good trades in the treasuries lately, so I guess we were overdue for a humbling over there. Okay, let's read Winston's link. Yeah, so the issue that I have with this one is that they're saying, okay, markets, you want to build a mean reversion trade strategy. How do you do that? And then they go and they give you a bunch of indicators that we've backtested and have shown are not effective. Because Bollinger Bands and RSI, especially on short time frames, don't work very well. And that's regardless of like what period you choose and all that stuff. I'd like you to check. I don't do individual securities. Sorry. Do not give my opinion. can tell you if I guess I tell you about like what are the pieces of news or information that might matter. But I don't like to come in and say, I think that the security is going to go up or down. Because our ability to predict that sort of thing is really limited. Comes back a little bit. A decent amount of volume interested in trading it below 58, though. Buying dips without any protection whatsoever is the dumb way to auto mean revert. Yeah, there you go. If you can find a synthetic spread that is really choppy, then mean reversion works great. Well, I would say if you're trading, we should try and build a robot that does that. Like in the treasuries. If you do mean reversion on the spreads, those do tend to mean revert. I think, though, if I made an algorithm to do that, I'm going to bet you that it would be unprofitable because you would have a hard time getting the fills that you need. So there was a lack of liquidity at 39.58, and somebody came in and slammed them down. So now we're coming back into the area between 56 and 53 or so that there wasn't a lot of, that they kind of just swept through. So keeping a close eye on this here to see if there's what kind of demand there is. There's a little bit there at 39.56. Do you algo trade? I have some algos going right now, yes. Those algos, though, are mostly in testing, though. And they haven't been doing too well lately. Nope. I could see Brandon failing again today. From watching the orders on Brandon, okay, so just note that there was some, on this way down, there was some strong sweeps. There's sweep selling. So there is some hints that a large sell side meta order has been coming through. Or we're not too far off of the high yet, though, so it's not like the end of the world or nothing. Come on. We're about to cross the streams as Wall Street Bets starts buying the stocks liquidated by Archegos. Yeah, which ones are they mostly interested in? Viacom and Discover Card. Yep. There we go. Phil, good job. Spreads can really blow up on you, though. Be careful. Yeah, well, I think it's just like anything else. Like, so the issue with an algorithm in that I've found, especially any kind of short-term algorithm, is that like what ends up happening. Well, not what ends up happening. One way of doing things is you go in and you say, okay, here's something that I think is important to the market, and you find this particular spot, and then you investigate that spot and all of the properties about it and all of the SKUs associated with that spot, and you use that to create a system that goes long or short based on that particular signal at that location, and give you a good historical percentage chance, at least, of being successful. Okay, so you're basically, you have a very specific signal. You have a very, very specific signal, something that doesn't happen very often, the conditions of which doesn't happen very often, right? But then once you're in the position, there's so many things that could happen that could screw you up, right? Like you could be in there and a big news headline comes in that pushes the market against your position. What do you do at that point, right? Well, if I'm trading it, I go, oh, okay, this particular piece of news means that the indexes are likely to continue selling all day now at this point, right? But your algorithm can't do that, right? So then you have to try and program all of these situations that could happen while you're in the trade to manage the trade better, right? And then the thing that can really screw you up from there is that then you run the possibility that you manage it too much, and therefore your winners aren't as big as your losers, or your win rate isn't quite there. You know what I mean? And so I think that it would be just like that with anything else, is that just from the spread, just trading the spread of something, probably you could pretty consistently make ticks here and there, right? If you're able to take into consideration the overall flow and taking them the correct directions and stuff. But you're still going to have to build into it some position management, so that if you're taking a spread trade and you get a certain amount of order flow against you, that you just bail right then and there and not try and hold it, you know? Yeah, Goldman Sachs, Morgan Stanley, Credit Suisse, and Deutsche Bank all forced Archegos to liquidate many of the China internet names. Yes. Oh, Goldman liquidated them by distributing to clients? Really? Well, that's interesting. Well, there is a lot of what the advantage that they have these days is that they're really big into the dark pools and stuff. Yeah. So, we could talk about securities. Yeah, if you guys really want to talk about some individual names, I could get Steve in here. Primary source of the chaos on Friday was the first liquidation of a good part of Archegos, right? We can bring Steve in here. We can talk a little bit about individual stocks, yeah? Right here, I got to go take care of something. So I'll just step out for a second, and Steve can come in here and he can talk to you guys a little bit. Yeah? What's up, losers? This is Stock Market Steve here. Oh my gosh, I sound terrible. No, you guys, what is all this shit on this screen? How does he trade like this? All these effing numbers? What the hell? Guys, you don't need... listen. Let's look at some securities here, huh? Don't listen to this guy. It's crazy. It's crazy. Let's go. Gucci gang. Nah. Way more. Not wearing my Gucci stuff today. You know, that's my other outfit. Pull up some real charts here. Come on, look at this. Yeah, here we go with charts. Wait, what's this strategy tester? Come on, it's ridiculous. All right. So let's look at some stocks. So I got some stocks. You want me to look up a ticker? Just tell me. Oh, I look handsome. Oh, thank you very much, Pierre. No, so this is the way it works. I'm going to show you some of these tickers. You got one that you want me to look at, I will look at it and I will tell you what I think. All right. But first, let's talk about the big ones, huh? Tesla. Look at that. Tesla up big, back. All right, here you go. Now this one's easy. You see this? Look at this. See this right there? Right there. You know what you do? You buy this one. Easy. You can't look at this. I mean, come on. It's Tesla, man. You can't lose. Just buy that one. By the way, this is all parody. And in case you're new, this is all parody. Don't do anything. You want to invest in potheads? Oh, man. Oh, yeah. There you go. See, this is the lady. It's going up, guys. Come on. Easy. No, 100 on top. That's all you got, Pierre? No, man. Like, listen, just all in Tesla. You be good. Just all in Tesla. Just buy it. You should be fine, right? It'll be great. All right, let's see here. What else? What else we got here? How about Gamestop? Look here. Gamestop. Here again. Easy. This is easy. Look at this, guys. High or low. Look at that. You buy this one. It's going to the moon. This thing is ready for lift. You see this? Just consolidation a little bit here. You know, there's some trend lines you got going here. It's going higher. Obviously. Support into exactly, Marty. You got it. Just support into the moon. You just buy it. Just buy this. It's easy. This is easy. Yeah? Oh, man. Let's see here. What else we got? Oh yeah. BLTR. Oh, now this is a little bit more difficult, right? Because you got this big thing over here, and you got this big thing over here, and like there's a head here. Okay, right? Like, sure, okay. But here's the thing that you got to take into consideration. All right, we come in here. There's this indicator. Okay, it's called Relative Strength Index. Right? Great indicator. Let's add that on here. Okay, look at this. Okay, so maybe it could go a little bit more. But look, you buy this right here. Easy money, guys. I understand some of the lesser IQ people might not be able to see that one, might not be aware of that indicator. You buy this. Look at that. Easy. It's coming down, right? All right, let's see here. Disney. I wanted to talk about Disney. Huh? Look at this. Are you kidding me, man? Like, do you even know? Like, what do you guys think? You think there's a buy or a sell? I'll let you know. Hold it. Let's see. What do you think? You think this is a buy or a sell on Disney? Huh? Yeah. Disney. Disney. Dude, look, the body. Look, you got it. Look at this. Yeah, it's up high. It's up big. Look at this trend line. Easy money, man. You can't lose with this one. Listen, I'm not giving you financial advice, but you should just all in on this one. Just buy it. Everything in on Disney. You gotta buy it, man. Come on, easy one. That's easy. Easy. What else we got? Viacom. Oh yeah. Let's see here. It's VIAC, right? Viacoms. It's CBS. Viacoms. What kind of a name is that for a company? Viacoms? Okay, whatever. But here's the chart now. Oh my, look at this. Holy crap. Look, we're down over. Look at that. 60% drop. 60% drop. Do you see that? That is crazy. You know what you do with this one? You know what you do with this? You buy the dip, obviously. Buy the dip, always. Come on. Will says that's a boomer stock. Yeah, but that's okay because we want to take the money from the boomers. They have the money. That's where we want to be, taking the money from the boomers. What are you nuts? Are you nuts? Come on, you buy the dip. That's an easy one. Just listen. Just all in on Viacom. I know, I know I said all in on all these other ones. You probably all in on any of these. You make money. It's easy. Easy money there. Arc, you want me to look at Arc? Wine stands. Why would you? What kind of a name is Wine? I don't. Okay, but look, we can look at Arc. Here's the thing. All right, I can show you the chart. It's a daily chart. That's not right. There we go. That's the right one. Okay, I could go through the chart and I could show you what I see in the chart. But here's the problem, all right? It doesn't matter because this Kathy Woods, you think you're as smart as Kathy Woods? Come on, they're ridiculous. Don't be stupid. Listen, I'm a really smart individual, all right? I have a particularly high IQ. I know that not everybody has a particularly high IQ, okay? But even I am not as smart as Kathy Woods. And here's what you do. You find somebody smarter than you, and then you just do what they're doing, right? So Kathy Woods is in this. This is Kathy Woods. You buy it. You know, I know, I get it. It's down a little bit, like whatever. Come on. What are you pussies? Come on. You just all in on this. No, that's right. Marty's got it. Nobody's as smart as Kathy Woods. Come on. We can't. Oh, that's good. Vlad, you got a point there too. Like you want to buy it. You got to buy it to hold it, right? What else? You guys got some tickers you want me to look at? We can look at some more tickers. Dude, do you think this moderator trades indicators only? Are you talking about me? You're talking about these other losers here. Come on, don't listen to these people. I don't know what they're talking about. Hodl, yes, stick. You got it. You just gotta hodl, guys. Like, here's the thing, okay? If you guys sell, how you make money? You all sell. You can't. It's not gonna go up if you all sell, guys. No, you gotta hold so that I can sell. Obviously. Bitcoin. All right, Bitcoin, good one. Let's go look at Bitcoin. Okay, now the issue with Bitcoin on TradingView is you got so many different choices. All right, got all these ones, but I'll tell you what you want to do is you want to go into the one that looks the best to you, right? Oh, how else are we gonna fight the short ladder? Totally, dude. These guys on Wall Street, are they just gonna fleece money from you? It's ridiculous, but that's okay. Steve here, he'll show you what to do, help you steer clear of the big bad guys. Obviously, that's good. Okay, so here's Bitcoin. Look at this. Oh my gosh, come on. It's so high. Look, Bitcoin, all it does is go up, obviously. You know what you got to do with this one? You buy it. Duh. No, duh. Come on. Look at the leaderboards. Dude, look at this. Look at all these people in chat. They're making money. Obviously, if all these people are making money, we got something going. You just go and find the people that are making money, like myself. Okay, I've already made $1 billion this year. All right, just not to brag, but already up $1 billion. All right, you just find the people that say, that are making money and just do what they're doing. Obviously, easy money. You can't lose, guys. You like this look? Dude, this hat, you have any idea how hard it was to find a hat like this? It's like the A-tooth and everything. This is a swanky. They don't make these anymore, man. Dude, this is a good hat. It's a good hat. And these sunglasses. I was at Walmart for like an hour looking for sunglasses, man. Found the nicest sunglasses. That's why I wear them all the time. They're just so beautiful, right? Oh, is that what it is? The hat on a different side and then we sell? No. Why? Listen, sometimes you buy and sometimes you sell. I'm not always saying you just only buy. Come on. Like sometimes you got to short, right? I'm just telling you what the chart says. The chart says to buy it. Easy money. Yeah, KT, you got it. Easy money, guys. Can you check if my payment went through for your premium course deluxe edition for $5,997? What stick? It might take a few days, okay, with a transaction that big. Sometimes the banks, they don't know we're high rollers. They're like, something's weird. They don't normally spend $6,000 on something. Okay, so it might take a few days, but I will check after this, all right? Steve is never wrong. Dude, listen, the chart. I am Steve. I'm wrong all the time. Actually, I've been wrong before, like really, but here's the thing. The chart is never wrong. You just look at the chart. It tells you what's going to happen, man. You just look at the chart. Can you get a refund? No, there are no refunds coming. You haven't even taken the course. You can't get a refund. You take the course first, and then after the course, you want your money back. And me and PayPal can argue it out. You mean you look at the chart afterwards? Well, I look at the chart before I look at it afterwards. I look at it all the time. Of course. All right. I think so. I'm not seeing any more tickers. So I think Seth is done with what he needed to do. So I'm gonna head out. You guys, just don't be losers. Stop being poor. Listen, there's a really easy. I know you got hard times in your life. It's difficult economy. Here's what you got to do. Just stop being poor. Just stop being poor. And here's Steve. He's going to help you. All right. All right. I will check you guys later. All right, guys. Was that good stuff? Did you learn anything? Did you learn anything? That was great. I'm glad you enjoyed that. I think I need to work on it a little bit more, but I thought it was okay. I'm gonna redo that a little bit, and I got like some plans for TikTok, so I'm gonna try and make a TikTok about it today. Wait, sometimes life hits you in the head with a brick. Don't lose faith. Steve. He leaked your trading story. Wait, what? Really? What did he say? What was it? I wasn't quite in on like the accent. The thing is I'm not sure I'm dedicated to the accent yet or not. So we came down pretty hard there, didn't we? Steve make the market tank. Is that what happened? Everything he told us, everything. Oh man. Oh man. And I see he chased off Ace, but Ace made his money there. Man, did he make his money. And you know what else Steve did? He kissed your wife, and she told us she really. Oh man. One of the you know, I've got a list of things, and one of them is like, what does your trading platform say about you? Okay, so like Robinhood, you like Robinhood? Just tell your wife I will be over on Friday at 7. All right, that's what it means if you trade Robinhood. Is Disney still on? I don't know what any of those. Get a surfer LA? Yeah, man. Totally. Think or swim. So if you use think or swim, what it means is you are not as smart as you think you are. You're going to have tons of charts up everywhere, all this stuff, all of these options. You want to trade options, but you can't actually trade them because you are still poor. That's think or swim. Steve talks like a literal child. Is that what did I do a little too much with the Rosticism? It's like a 7-year-old. I was thinking about making it a little bit more Bernie Sanders. You know, like Bernie Sanders, he kind of back of his throat. A little bit like a tough guy, you know? Okay, so we got a pretty good initial sell. There's something a little bit more I'm wondering here. If they're going to push through here or not. Because this, again, looks like they are running into the wall. You obviously haven't been around many gurus, no. Wait, or are you saying that to somebody else? I just gotta look at the people that I've had issues with and that I see on TikTok always giving advice and everything, and I'm just use those sorts of things. Right? It doesn't. They're not actually reading anything. They're just making the chart say what they want it to say. You haven't picked up. Is there a guru accent? What is the guru accent like? What are some keystone fact parts of the guru accent? Well, Alt Trade not doing so well at the moment. Looks like I was maybe a little early. Oi. You've got to sound like you're selling something like an ad. So like I got to sound like the Sham Wow guy? You're right. I don't sound enough like I'm trying to sell something. I do. I need to be more like I'm just trying to help you, you know. But to really help you, you have to buy my $6,000 course. Sham Wow guy. Oh, that's what I got. I totally hear you. I'm gonna work on that. Look at this. That was a good trade. So you know, let's ignore what happened to me in the treasuries, because man, I have no clue what's going on over there. But tell me, am I just lucky? Because it's been like this every day now. Pretty much, and both sounding like you don't really know what you're talking about, make shit up like a good salesman, right? Like one of the issues that I had when I was doing that is like, oh my gosh, so Viacom, oh man, like you were saying it, you were saying exactly what I was thinking, man. When I showed you Viacom, man, I'm like, no, we want the stock Viacoms. Like, man, look at that ticker, man. Like, I just can't come in and just straight up all in buy the dip on something that's down 60%. Like, I'm gonna bet you that sometime this week that Viacom will have a really huge recovery. I don't think that they will make it back to all-time highs, though. I think that they were artificially high because of those guys, you know. So I'm like, man, on a ticker like that, my observation has been that I can very often predict what it's going to do over the longer run, like that there's going to be some amount of recovery, but it's not going to reach the all-time highs, is what I'm saying in this case. But like as soon as you start trading it, they just shred you to bits. You know what I mean? So to come in and just say, just buy the dip, like almost made me like physically ill to say that. The Guru. I remember when that movie was on the commercials on TV. Man, that came back really fast, didn't it? Well, the 2J's not doing so hot today. Anyways. The ShamWow guy. Every time you use this towel, is that a better accent? Look at this. Come on. So he kind of has it like up in the top of his throat, kind of almost like Kermit the Frog. Look at this. It just does the work. I might call it quits today. I have no idea what this market is doing. Well, I feel like when I took my short, obviously I should have held that for a lot more, but I've kind of been saying, let's just take our targets. Cool. The flow in the 10-year, the flow in the E-mini is working really well right now, I would say. So all right, so let's check back here on Twitter, make sure we don't got what we got going on here. Bank of England's brazier, the economic agreement on changes may be hard to learn from a market upheavals a year earlier. Evergiven will head to the Great Bitter Lake for inspection. Who else can't wait to go to the Great Bitter Lake? And by the way, Treasuries may be finding a bottom there. No, I said I'm not going to trade that anymore. I would try and make if my call earlier hadn't been so bad, I would maybe try buying it there, because I feel like that move down was kind of a freak move. Well, and you notice as that happened, silver and gold getting just creamed once again. I'm getting a little sick of silver and gold following the treasuries like this. Is ridiculous. At some point, those silver and gold, I think, are going to come roaring back, and it's going to be ugly. But for now, they just keep selling it. And in this market, if you don't have the Momo, you got nothing. We got Momo or Fear, nothing in between. In between, we wait and buy Extreme Fear something. Well, yeah. Well, I think the reason why you get the movement that you do, though, is because of the impact of large meta orders, right? It's like you got these big guys throwing their weight around with margin and stuff. And the best part is that you get all of this news these days. They can explain who's doing it and stuff. I think that with that you can have some situations where you're really where you can really have an advantage. Captain Underpants was canceled. Oh, I didn't think it was that great of a show. the NASDAQ versus a 3 basis point rise in the US 10-year yield. I want to know who was selling, man. Who sold that in the treasuries? That was a move. I'm so glad that when that came back down to the lows again, I was like, screw this, I'm wrong. I'm obviously wrong. I mean, I took a hard hit on that, but it could have been so much worse, right? Never gets old. Yeah, just, I don't know. My kids would watch that show and I was just like, okay. So I'd say that this flow at the moment is pretty flaky. Like, I think what's going on here is you're having liquidity issues. The resting liquidity is fine, but some of the latent liquidity is a little bit flighty. And the way that it's been trading on the downside does suggest to me the presence of very anxious sellers, you know? Because why would you come in and, like, especially when it was up there at the highs, like they were sweeping them out, right? Why would you do that at highs? Unless you didn't care if it went up higher or not. You just wanted out. You know what I mean? Well, they're certainly getting large swings both ways. Volume changed not nearly as much as it was, though. Except for that last push that touched the low. That one was a little bit much. Oh, yeah. You know, I forgot to mention this. Did you guys see this story on ARK? That their prospectus was changed to remove investment concentration limits. So everybody has been, you know, hitting them, criticizing them rather, has been criticizing them for being for having too much concentration in certain securities and saying, you know, you won't be able to get out. And that there's just a significant amount of risk in it. And so what do? They go and change the rules so that they can become even more concentrated. That they, you know, basically you couldn't have like more than 10%. And now there's like no limit. So people are, or there was 30%, I think. So people are saying like, oh, they might up their Tesla holdings to 30%. And I'm like, that kind of sounds to me like it's when you've bought it and you're relying on your market impact and you have to spend more and more money to keep it propped up, you know? Kind of wonder. Crime broker versus prime broker. When you dump your client's exposure first before others figure out what's going on, claim zero hedge. It doesn't surprise me that Goldman Sachs dumped first because they just straight up have better models for that kind of stuff. Like, there's a reason why they had the best execution. What what are you saying here, Stick? What's the extent of NinjaTrader, and where would I need to begin using something like R or Python for working with market data? So I would say that if you import libraries into NinjaTrader, which is not something that I've done, but I need to, probably one of the next projects I should do. And there are some problems with that apparently, but I'm not aware of where the pitfalls are. But once you can pull a library in, you can accomplish just about anything that you want. The place that where R is useful is like you want to aggregate your data together quickly and then draw a chart about something. You can do that really quickly in R. Whereas when you have a charting platform already in NinjaTrader, the sorts of things that you would be doing with that kind of data don't really make sense so much. So typically you're only pulling out R for something that's really funky. So like one thing that I like to do is what are all of these different indicators show in my strategy? Is there a skew to any of them? Well, you can go through and you can change each one individually and run a backtest, or you can just run the most general version of the algorithm first and output all of that stuff and then go and plot it in R, right? So there's an example. Or in Python, you want to use machine learning algorithms, which you can get in C#, but a lot of people find it easier to use Python for that sort of stuff. So I'm going to say there's certainly situations where one might be better or the other, but at the same time, you could probably get it to work in NinjaTrader if you wanted to. So it probably has more to do with your own preferences and experience than it does anything else. So I do that in R. I could do that analysis in C#, but I do it in R because I've used R extensively before, and I know that I can do that particular thing really easily. Right? Winston, but still posting that same news, different views of that same news. Another thing I would say is, if you're programming in NinjaTrader, I would certainly master the programming in NinjaTrader first. Okay. Who was that target, by the way?
Winston Small says the sale of big blocks of shares late last week by many banks, including Morgan Stanley, Goldman Sachs and Deutsche Bank.
Oh, it was Brandon. So Brandon redeemed himself on at least one. Algos can't wait for Europe to close to ramp the hell out of this zero hedge. I think that's exactly what's going to happen. No, it's only when Winston speaks.
Weltenseg LA says lol, your text-to-speech is a German lady? Grin, I love it.
That's the default. But if you do exclamation point info, it will show you some commands on how to change your accent, either permanently or for a one-off. We also have the Chinese. The Chinese one is the funniest. Is there anything better than NinjaTrader that uses C# as a quant tower? I don't think so. The other one was, what is it called? There's this other order flow based platform that uses C#. But the people that I spoke to that were trying to use that were really frustrated with it and moved over to NinjaTrader. I wish that would work in real life changing. Me too. I wish I could just pick a New Yorker accent and go at it. Yeah, that's what it is. ATAS. Yeah. Yeah, I mean, I think that NinjaTrader has a really strong platform. I've noticed a lot of people claiming recently that they don't trust certain things about the backtesting and so forth in NinjaTrader. And I'm like, yeah, actually, you absolutely should be suspicious of the results that you get in NinjaTrader. But the problem isn't the backtester. The problem is almost always you. Like, there are so many little pitfalls, and NinjaTrader gives you all of the tools to deal with them. But you have to actually understand that they're there and what those errors are. So that's why I was going to make a video. You're still short, Ace? Wow. I mean, I went short. What price did you get on your entry? Because I took mine at 55. 39.55. Did you get better than 39.55? I think you were probably a little bit below that, right? Yeah, 52.25. Oh, well, that was a little late, Ace. Wasn't it? Wait, let's go back up here and check. 39. So here's about where I went short. Yeah, because it came down and then it came back. You probably dealt with less excursion maybe. And you said 53. No, 52.25. So somewhere around there. That's not awful, but it is a little late. A little FOMO. But you held it. That's good. See, the issue I'm having here, well, how long do you hold it, right? So could I have held that one for sure? But I've just had too many times where like I want it to go and I hold it and then it doesn't, you know? So I think that in this situation, I could have waited until there was more absorption down towards the lows, and I could have probably held that one for 20 points, but no. I'm fine with taking the 3 and getting 50. Plus, we got the opportunity to practice the Steve thing. And it looks like you guys generally liked it. It seems to me like something that like we might be awful at first, but if we keep practicing with it, we could get really good with Steve, right? Well, NinjaTrader is older and so probably has a ton of helpful information out there, right? Yeah. Well, and it's all in their documentation. It's just like, I think that people want to go in and say, I want to go and program my algorithm and then just use the default settings on the backtester and it should tell me everything. Well, so you have a problem right then and there with the fill resolution, right? The fill resolution is usually the first one that traders learn, that backtesters learn matters, right? Is if you are taking a target and stop that are less than the average range of a bar, the results that you're going to get back out aren't going to be very reliable because there's no way for the backtester to know if in a bar, if it hit your stop or your target first without putting a better resolution data series underneath of it, right? And that alone is a lot of the problems that people have. So they always want to trade like this tiny little scalping thing. And they do that because the backtester shows that it works. NinjaTrader barely supports order flow, and they stated they won't support it any more than the basics that are in. Well, so how do you say that? Welton Seg LA. Where the NinjaTrader order flow is so effective is on the programming side. So in terms of indicators, yeah, that's right. Their order flow indicators that they include with the platform, if you own the full license, are pretty basic and I would say not that great. And that's intentional because they have most of the people that want to use something like that already have some sort of third-party indicator that does similar, right? And that's where I'd say it's so powerful is when you take into consideration historical bid-ask prices and tick replay that is built in, and then just the way that they programmed it so that you can just attach a method to a listener that listens for every time that an order flow event occurs, and then do all your tallying up in there. And then you add on top of that that it's done in C#, which makes it really easy to manage these data structures. And that's where I think that the NinjaTrader order flow has such a leg up. Now, the downside here is that what tick replay says will happen, particularly on very, very short time frames, is not necessarily what your code will do when it's running live. There are going to be differences, and I've found that they're enough to matter, especially if you're talking about something that's only going to be like a 1% to 2% edge anyways. Then the differences in tick replay can matter a little bit. Things like that. So, and of course, the smaller your targets are, the more of an issue it's going to be. Welton Seg LA tried to code stuff with footprints, for example. You basically have to recreate your own footprints. Yeah, well, they have footprints built into it, and I'd say that their footprints are pretty good. But I have written my own footprint, and I did not find it too difficult, actually. Because again, like you use the data structures, you use those dictionaries, man. C# dictionary is freaking amazing. You just stick them into dictionaries, and that's all taken care of. And the only difficult code is getting it to draw properly. Now, drawing in NinjaTrader is a pain in the butt, but then I would challenge you to do that kind of raw drawing in any other platform. It's going to be just as hard. Like try to making that kind of level of drawing in Sierra charts. Oh my gosh, it's rough. Because you have to do all of that stuff, and there's all of the extra memory management while you're drawing. So it really is effective. The NinjaTrader really is a pretty good platform. And where it is lacking, I have to say that, there's some things that you got to know, and there are some things that just everybody has problems with right now, and nothing's perfect, I guess. Somebody was saying something else. I have a bunch of extra threads that just sit here completely idle. So I think that one place where I have issues in NinjaTrader is that tick replay can't be multi-threaded. So when you do when you do backtesting on tick replay, it takes a really long time. Like there are some parts that can run multi-threaded, but there are some parts that have to run on a single thread. Why are the dictionaries better? Well, so the thing about the C# dictionary is it's just a crazy flexible hash map. Right. So I could go into what do they call them in the C++ STL? They call them like a array matrix or something like that, But in C# you can do all sorts of crazy inheritance level stuff with them. So you can have like a top level class and a bunch of different classes underneath of them. You can put them all into the same array, but then you have reflection. So you can go out and you can say, pull out to me all of the objects in my array that are like this or that are like this. And so you can filter them based off of those what kind of class they are. And then you get all of the link stuff on top of that. So you can do the kinds of queries about, you know, how you want to filter that data set. Say they're all the same class, but you just want to filter like which ones have volume over X amount, right? And that's just a link query in C#. And they have all these methods to very quickly convert them between arrays and do whatever kind of manipulation you want. So the manipulation of those hash map data structures are really powerful. And yeah, you could do them in C++, but it is going to be a lot more work. You could do them in Java, but Java doesn't really have link syntax, really. And, you know, it's just things like that. But I switched because of outside forces, not because it didn't like Sierra. Yeah, well, I would say that. So here's the issue I have with Sierra now, these days. Well, with Sierra, you can get custom indicators that are pretty good, okay? But they're not as good as the NinjaTrader indicators. But in terms of like it running well and everything, I'd say it's top notch in that way. And so, but I kind of view that as more for the person that just wants a solid platform and they're not doing anything particularly unusual, right? And so we typically compare Sierra charts to NinjaTrader, but I'm starting to think that Sierra charts' real competition is Jigsaw, right? So Jigsaw is more expensive, but it's just as stable, and I think that their base charts are better and their DOM is better, you know? And given that Sierra charts keeps increasing the fees on people, it may soon come to the point where you're where maybe Jigsaw isn't all that much more expensive than Sierra charts, other than that you have to put in an initial investment in, I guess. Yeah, if you trade order flow together without any indicator magic, then Sierra charts is top notch together with Jigsaw. Yeah. But then that gets you back into this other thing, which is like, I really question how effective you can really truly be using built-in indicators. I really do. You know what I tested the other day? This one is so crazy. I need to make a TikTok about it, but a TikTok that has been going around has been regression bands, right? So this is where you run a regression line across the whole data series. So a regression line would be the linear line that best matches the overall data series, right? And then you create bands like 1 and 2 standard deviations away from it, right? And if we're 2 standard deviations away from it, then you buy and you sell and vice versa. And these guys were showing them on daily charts, right? Well, there's an issue with a regression line, right? It redraws the regression line every bar. So you will go back and look at it and say, look, here, last time it was 2 standard deviations, it reversed almost on the dime. And it'll be like, yeah, actually, you will find that it does that. But you know why it does that? Because it's a regression line. So when it was, a month ago and it was at that point, the chart looked different. The regression line, it wasn't the same regression line. It adjusts as you go along to better match the data series, right? So basically, historical values of the regression line are you can't read them. You can't do anything with them, right? You can only do something with the current regression line value. Did that make sense? Did I explain that well enough? Because I haven't done it yet because I've been concerned that I wouldn't be able to really explain it to people. Maybe it would help if I pulled it up. it's back printing. So if I come in here and I add, is it just regression bands? I think. Regression channel. Okay. And I'm going to make this really high. So the ones that I've seen there do the whole data series, but the NinjaTrader one only has a limit on number of bars back, which is fine. Okay. So this is what you get, right? Here is a regression channel. So it's saying this is the linear line that best matches. And then you're going to see that when it gets like one standard deviation away, it tends to come back and revert back to the mean. And same here, right? It seems super amazingly great, right? But the problem is that if we were to come back to here, for instance, okay, and we were doing it here, the regression line would look more like this, right? So the regression only shows the current regression line. It doesn't show you a historical regression lines. Yeah. He says, okay, now I agree. This way they are useless. So when I saw people sharing that on TikTok, my first thought was like, oh man, like I can totally shit on these guys because this doesn't work very well at all. Like that there are some real problems with the way that they're explaining it, that they clearly don't understand that it's redrawing that line every bar, and that back when it was here, that's probably not what the line actually was, right? So I back tested it, and when I back tested it, it actually wasn't awful. On equal risk reward, I think it gave me back like a 51% chance. So it was within the margin of random, but it actually did come back to me as that it worked. Can you believe that? So that was really interesting. But those are probably that, and a Fisher transform worked okay. But the best built-in indicators that I've gotten on equal risk reward, I can get it to maybe give me 52% after a bunch of backfitting. Did Steve also backtest this strategy? Are you kidding? Steve doesn't need to backtest anything. He just buys it. Of course, you're selling high and buying lower. Yeah, sure. I don't know. It was okay, but I was sitting there and I was like, well, yeah, but it's kind of backfitted, and it had bad drawdowns. You got to experiment with more than one and find the best time frame. Yeah. So when I did this, I didn't change the data series underneath, but I did run it on a bunch of different periods and targets and so forth. So I feel like I explored the whole space of that, at least on daily and 1 minute bars. But Steve himself is the indicator, like Jim Cramer, right? Well, I had thought about that, but that's where I was like, no, but Steve will always just buy. Because if you're a guy, honestly, if I was out there trying to scam everybody and be some big guru that everybody followed, that's what I would do. I would just only ever tell people to buy. Because in stocks, if you buy, you're going to win more often than not, because stocks tend to move up. And then when it goes down, it's just like this short period, and you say, oh, I bought the dip, and then you're up big again. And then when it recovers and it like doubles, and you claim, see, look, I made all the money because I bought the dip. That's how it works, man. Even then, I wouldn't try for signals, just filter extremes for when to take your normal setups. Well, yeah. So with the way that I was looking at it, certainly I would be hesitant to be taking along when the regression line channel says that we're overbought. But I wouldn't go short there either because it's a 50-50 as to whether or not it does. Like Jim Cramer, he gives you the pump signal, but he keeps the sell signal to himself. Nah, he wants everybody to just always buy, and he's the only one that ever sells, right? Or at least if they all need to wait to sell until after he's done it. But Kramer, he's got. I gotta say that everybody bashes on Kramer because when they go through on his picks, they've said certain things. I think there's an issue when you look at. He's not necessarily, every stock that he ever mentions is necessarily endorsing it as a buy. So then he has his charitable fund. And my understanding is that the charitable fund is just kind of okay. Or that it doesn't outperform the index at least. Which, hey, you know what? That's what you expect. Most fund managers aren't. And once you're, not only you have a ton of money that you're managing, but you're posting everything that you're doing publicly and letting everybody see it. Yeah, this is going to be hard to make money doing it, right? But the thing that Kramer can give you that I haven't seen anywhere else is he can come in at the end of the day and he can say, this is why we're moving down and this is why we're moving up. These are the market, what does he call them? Themes, storylines that the market is focused on today. And this is the way that Wall Street tends to view these sorts of things. And I found when I would watch him, maybe I should sign up for CNBC Pro so I can watch that stuff again because I enjoyed watching those shows. I found that stuff to be invaluable to learn how they think. Just don't follow his specific stocks, right? Instead, follow his method. Look at the things that he says, here's how you value this kind of a company, and here's how you value this kind of a company, and here's how you read these different things. And then go and do your research and find your own stock that nobody's talking about. And that's where you can, that's where I think if you're going to be successful with doing stocks, that's how you're going to do it, right? Remember that the Friday surge created a market profile that's filling now? That's a good point. We're still basically above all of Friday's action. The action was basically before the breakout, it was to 34. So single prints all the way to 34, we've closed those. If we start getting into the other side, then one has to wonder. And again, there's empirical evidence that when there is a sign change on market meta orders that immediately follow each other, that you get, if that was equal, this one goes more. So if it's the same thing, if we say these are equal, then it's going to go down to here. It's going to go to like 38.70. But we don't know how big this meta order that's been coming in short actually is. I'm actually, based on the flow that I've seen, still a little bit skeptical as to whether or not this is more, what is their name again? Archegos. I'm not convinced that this is more Archegos selling. This may just be depressed sentiment from everybody reading about the Archegos selling. You know what I mean? Yeah, they did make a new low there. Just buy a little bit. You can see right now the book is struggling on that. I like to watch him ironically, but I worry that if I watch Jim too much, it will warp my brain. No. Well, and so here's another thing is if you watch the whole show. So he does the lightning round and he's all hype. But then when you really look at it, is that really him? Is that really him? No. He understands that the market likes the hype. But that's not necessarily how he trades it, is it? He trades it like a hedge fund traded it. And I think getting the insight from a hedge fund manager, even if it was a long time ago, I think is valuable. So I think there's a lot you can learn from him. Just don't follow any guru's picks, right? This is why I'm like, I mean, I used to like kind of tell people, I'm not really do stocks and stuff. Now I'm my policy is I don't talk about individual stocks. I can tell you what are the storylines that are going on in it, but I don't want to make calls on individual stocks. Yeah. The other one is fast money, because those fast money guys, they're kind of the same thing, but a little bit more of a variety of it. And you see what they're saying about these different things and why they're moving and what the storylines are. Because that stuff matters, man. So many people want to dismiss that stuff, but it freaking matters so much. What about Real Vision? I don't know what that is. Is that a new thing? Is that a new show? It's great. Brazier, bond yields haven't moved suddenly this year. And Zero says, Brazier may want to splurge on a real-time bond feed. Right? Bloomberg, but I can only copy the headline. Finance bond investor revolt brews over bogus green debt flooding market offerings labeled as green aren't always what they seem. No, I don't know Real Vision TV. What is that? Real Vision TV. Oh, it is a whole network, is it? Want to see a video that will change your... Well, that alone makes me hesitant to want to watch them at all. They got a daily briefing. They've got a crypto tab here. Pricing. Oh, my. $239 a year. $875 for the day. That's... Wow. Sounds like it's too good for me. The user reports indicate Twitter is having problems since 10:56 Eastern Time. Oh, yeah. You might have missed it, Kyle. We were talking about the linear regression lines. They get interviews with exclusive people. Yeah. I think that watching, like, here's the thing is, like, when I worked at Goldman Sachs, there was a TV at the end of every row that had CNBC running all the time, regardless of where you worked. Everybody had it. And I think that part of it was maybe just for the ambiance, but I say that if Goldman Sachs thinks that it's worth it to watch CNBC, that it's worth watching. That's not going to make you profitable on your own, but I think there's things, and I used to watch it. I would watch it from within Thinkorswim. You can, if you download Thinkorswim, even if it's the demo, you get a feed from CNBC. It's a little bit delayed, but hey, worth it, I think. Now you got me all thinking about, let's get a CNBC Pro membership now. I kind of would like to. Couldn't play it while we're trading. That would be way too distracting. Or even while I'm working. Even if I did it during the day while I was working, that'd be hard. But I could watch it on my Apple TV and watch those shows. Oh, I missed your message in the Equities Indexes channel, Kyle. So you can do like synthetic spreads with options, but there are also like people use that word interchangeably for a lot of different things. Let's just say. You can get a free trial for $1? Yeah, but they're... How do you, where do you hear about this? They have like a YouTube channel or something? Like they... Video on demand for finance, where the world's smartest investors share and find their best ideas. Exclusive guests, Legends of Finance. It looks like it's totally the thing. It's just that the pricing, the real pricing. Let's see here. What do you get on their base one? Investment ideas and presentations from top investors, quarterly flagship investment themes, tutorials and breakdowns of core concepts and ideas, daily programming covering the entire crypto space, weekly debrief of the most relevant analysis across the RV. What does RV stand for? Research something. Unlocked plus content, access to the exchange and online community of thousands of investors. Do you have this subscription? Do any of you have this subscription? Let me put it this way. Let me know if you own a subscription to any kind of a news service or video platform, research, whatever, or you have in the past and you liked it. Tell me what it is. I have Financial Juice. I love the Financial Juice News Squawk. I think it's probably your best option for most retail day traders. Rand Squawk is a better news squawk, but it's pricey. Watch the free content on YouTube. Oh, okay. They have free content on YouTube. That's good to know. Because I like on Zero Hedge. Man. Okay, so here we go. CFDs, the dirty little secret behind the collapse of Archegos. So let's read this. Stop us if you've heard this one before. Wall Street prime brokers allowed Fed funds to dance while the music was playing with ever greater leverage and off-exchange and unregulated derivatives until the first sign of trouble and the whole house of cards comes crashing down in a potentially systemic manner. The bloodbath in various media stocks on Friday has brought light back to one of the dark corners of the equity trading business, so-called contracts for differences. Ooh. I liked it when we could hear that British guy would read the news out over your speech. Yeah, you're not supposed to be able to hear that. But Ace, you should subscribe to them. It's $70 a month and Financial Juice. And from time to time, they will give you a $700 lifetime membership. And I have a video about trading the news where I have an affiliate link to that, and you can go and try them out. And it helps the channel out if you subscribe with the affiliate link. But if you want to hear the British guy. And yes, I do think that your news squawk should have a British guy. like straight up here. This might be an unpopular opinion. This might be like a heuristic that I can't prove or anything like that. Okay. But well, I don't rattle it off. So when I tell you guys something that happened, I wait until it comes on Twitter. So when I'm saying something like that, it's usually like a good 15 seconds after it happened. Because what will happen is Financial Juice will say it over the news squawk, and then maybe 10 seconds later they'll tweet it, and then I'll read it out. So Live Squawk has the best British people. I swear their accents are on point. So here's the thing is that I think that because of the Europeans, there's all of those countries there. And I think that the financial news component of the Europeans is more sophisticated. And so I do think that you'll get better quality news feed if it's coming from the UK. I don't know if I can really justify that, like prove it empirically, but that's kind of been my so like maybe a better example is the Financial Times. The when you really want to get those really sophisticated highbrow analyses of what's going on and stuff, so often it comes from the Financial Times, right? And not from Bloomberg and CNBC. And I think that if you were just trading stocks, it would be different. But for those of us that are largely trading macro forces, I think you want your guy to have a British accent. Plus, you want these guys that have been up all night watching it so that when you wake up in the morning, they can explain to you what it's been doing, right? So let's see, what do they say more on this? As Bloomberg reports, much of the leverage used by Huang's Archegos capital was provided by banks including Nomura and Credit Suisse, who have most recently admitted huge losses as CFDs, which are made off exchanges, allow managers like Huang to amass stakes in publicly traded companies without having to declare their holdings, far in excess of the 5% stakes that require regulatory reporting. Crucially, as Bloomberg note, this is why we're not able to know how much is actually out. Okay, good. Crucially, as Bloomberg notes, this means Archegos may never actually have owned most of the underlying securities, if at all, as the CFD is akin to a privately arranged off-exchange and bespoke futures contract where the difference in the settlement between the opening and closing trade prices are cash settled. There is no delivery of physical goods or securities with CFDs. What makes the situation worse is that Archegos reportedly took positions in these contracts for difference with various prime brokers, and because these positions are by their nature not centrally cleared or aggregated, this left prime broker X unaware of their clients' exposures with prime broker Y, which in this case was huge. It's all becoming clear now. Normally, Goldman Sachs would have said, okay, you know what? You're taking on too much risk, and this is bad. But what they didn't know was that these guys also were taking on risk with all of these other guys too. So the aggregate risk that this one guy was taking on was so excessive, but none of the people that he was taking none of the brokers that he was taking the risk with really understood the full nature of it. Oh, this is a real problem. Now I understand. How do you deal with that? You require the CFDs to be publicly reported, or at least reported to the regulators, and put limits on how much risk you can take, because that's not okay if you can just go and take like the maximum risk with every broker. Oh, geez. And I can't believe that somebody with that much money would do something like that. The leverage Huang was given made him look like a trading genius, as the various positions he took were pumped and dumped to help to buy gamma squeezers, but now look like reckless gambling fool as the bets collapsed. CFDs linked to stocks with a gross market value of around $282 billion at the end of June 2020 are among bespoke derivatives that investors trade privately between themselves or over the counter instead of through public exchanges. This is exactly the kind of hidden risk that amplified the losses during the 2008 financial crisis. As Bloomberg notes, regulators have begun clamping down on CFDs in recent years because they're concerned that their derivatives are too complex and too risky for retail investors. With the European Securities and Markets Authority in 2018 restricting the distribution to individuals and capping leverage, in the US, CFDs are largely banned for amateur traders, but not for hedge fund managers who are quote-unquote sophisticated. But banks still favor them because they can make a large profit without needing to set aside as much capital versus trading the actual securities, driven to this opaque market as unintended consequences of heavy regulation following the 2008 crisis. In other words, they like them because they can take a trade on something without having to have a market impact. At least not an initial market impact. In the case of Archegos, there's very little transparency about Huang's trades, but market participants suggest his assets had grown anywhere from 5 billion to 10 billion in recent years, with total exposure topping 50 billion. And bear in mind, this is not quote-unquote leverage in the old-fashioned sense, i.e. banks allow you to buy X times the amount of stock relative to your capital. This is purely synthetic. The firm has no actual underlying asset to fall back on, but is linearly exposed to the losses and gains on a margined basis, just like we are when we trade futures. As we noted in the beginning, this has the potential to be much more systemic, as the losses created by Archegos margin calls trigger more margin calls and more potential losses for prime brokers. Think we are exaggerating? Then explain why the costs of counterparty risk hedging for Credit Suisse, for example, has exploded in the past few days. Mohammed El Alrain told CNBC this morning that it seems to be a one-off for now. It looks contained, and that's a good thing, but added, what we don't want is a pileup. Which is exactly what I said. It looks like bad, but it looks like we've run across a systemic issue in the markets and that the markets are handling it okay. Well, there's a reason that CFDs need to be able to exist, but you shouldn't be able to do them with the way that he was doing. I think that if you want to make the kinds of plays that Archegos was making, that you should be required to buy the stocks on margin. Going through and buying a contract for difference with somebody else so that you don't actually affect the supply of the stock is totally... Okay, what are you saying here, Stick? My take on Reuters is that they are good for unbiased news, but their trading platform is only good for the vast amount of unique economic data and all sorts of other random stuff you can get at your fingertips. You say it's dangerous to be long. Well, like I said, if we're getting a large meta order that's sold, for instance, then that was probably half of it. And there might be more continued downside, but it will follow a square root law, which means that you won't get you might make money on the downside, but it will be limited, right? And then the question is, does that trigger other large meta orders? Stickball, they have a train. Yeah, they kind of got like you can get market data and everything. Did you say something before that, Stick, about the environment created by a British person talking to you makes you feel not as lonely? I think that when I'm looking for remember when Russia was invading Georgia and Ossetia and all that stuff? During that time, Reuters was the only news source that you could trust on that stuff, because so many other news outlets were not reporting it fairly. To be that was, oh man, it's kind of crazy how they were just able to throw that under the rug. But especially initially, the news outlets didn't really want to report on it because it was something that made Obama look bad. And on top of that, you had the Russians were trying to create disinformation everywhere that they went. And there was a number of headlines, and I don't remember what they were, but I remember this dynamic going back and forth for a while where something would come out and then Reuters would report differently, and Reuters ended up being right. So especially when I'm looking at international news, I think Reuters is a very reliable source. On the other hand, if I am looking for the fastest and most comprehensive news source, it's comes out of Bloomberg. So a lot of these guys like Financial Juice and News Squawk, they are basically paying Bloomberg to redistribute what they get off of a Bloomberg terminal. So that's why sometimes you'll see a move and it will move, and then you'll hear it over our news squawk, because that's just how long it takes for them to see that it was there and start reading it out, right? So they're delayed a little bit. Whereas the people that initially take it are like the robots that are directly attached to the Bloomberg feed and trade it, right? Reuters was created because of this problem of fake financial news to manipulate the market that has existed for like since the 1800s for sure. Anyways, so if you really had the money, I would buy a Bloomberg terminal, but that's a couple tens of thousands of dollars a year. There are some people on TikTok that they trade just using a Bloomberg terminal, and it's interesting to watch them go through it. Let's come back to Twitter. US CDC windows of Pfizer or Moderna vaccines was 80% effective in preventing COVID. Anyways, so the whole thing was about reading that was like these kinds of articles. I don't see these anywhere else. Now, you go on Zero Hedge and there's all this other nonsense that I don't give a shit about, okay? Everything in markets has become political. Well, this one is maybe actually worth reading because it's Rabobank saying it. Here, this one's a good story too. These ones are just, kind of the dissection of markets that I give you guys in the morning. Okay, so like this. Heavily armed Antifa protesters clash with Proud Boys at Oregon State Capitol. So they have a lot of news on Zero Hedge that is not financial news and is political news and is playing to their audience. And sometimes it is complete trash. Like honestly, I have read some real trash on Zero Hedge before. But if you could find me a news source that was like maybe less than $50 a month, that was nothing but this sort of a thing, I would do it. Now, with Zero Hedge, they came out with Zero Hedge Premium, but really all Zero Hedge Premium ended up being was the same Zero Hedge, except for that every once in a while, like maybe once a week, there will be a story that only the premium readers can read. So I didn't find that it was worth it. Maybe if they step it up and start putting out more content to subscribers, then it would be worth it for me to get their subscription. But otherwise, I'm back in the market for a subscription of some sort. Don't be aggressive chasing. Longs. Yeah. Well, it looks like if you buy the absorption, you can catch some pretty good short-term trades long, but what's this? Volume could quickly pass existing benchmarks. Total chairman and CEO tells CNBC as Murban crude futures start trading in Abu Dhabi. Oh, I see. Small caps are puking. Any race Friday's panic buying ramp. But don't worry, the SEC says it is monitoring the situation. Anyways, what else? We got about 10 minutes here. Sorry, was there something? I know you guys were saying a bunch of stuff. Was there something on the previous conversations that you said that I missed that you want to talk about before we go? Pretty quiet overall. about NinjaTrader? We were talking about the backtester. I mean, the thing that's I wanted to make that video this weekend, and I still wanted to like write out a script, but like the baby did not cooperate this weekend, man. Like by the time it was ready, I had a free time to try and record something. It was late at night, and my delivery wasn't good, so I was like, nah, I was just gonna have to. Well, the recap is that when you are backtesting, you are far more likely to discover a pitfall with the backtester than you are to find a strategy that is actually effective. And so you're often going to run into a situation where like the most common one, I think, is that somebody comes in and they have really super tiny targets and stops, and the time frame resolution that they're using isn't effective enough to show them that. And so the backtester just assumes that they're hitting their targets when you don't really know if your target or your stop was hit first. So that's the biggest one. What else do we got here? I'm starting to learn how to code with NinjaScript like it's my first language, pretty much, because I can't stand courses. Rather, I just try. Yeah, no, that's the way to do it. Like, so you notice that I have videos about backtesting, and I show you the main functions in NinjaTrader, and I show you how to leverage data structures, and I show you how to use the debugger, and then I just start showing you strategies, right? Because the way that you're going to get good at this is you just got to start making strategies. So like the recommendation that I would make is, even though these probably aren't going to make any money, go and backtest the built-in indicators. But go and find whatever indicator everybody's talking about that day, go and backtest it and see what the statistical properties of it are. So you'll learn a lot from going at it and saying, oh, okay, so here's RSI, it doesn't work, but it can give you a large winner compared to your loser, right? And you kind of learn things about how the market works and so forth because of that. What the skews are. And okay, so that was a pretty strong buy there. Oh, the next one was kind of what we talked about earlier. There are some indicators where the historical bars are not accurate. So like if you're doing a Renko chart, or you're using, you're comparing a value on a linear regression line from so many bars back, that's not what it was when that bar was there. And so the backtester can get screwed up because of the data series or the indicator that you're using is not actually backtestable, quote unquote, right? Then we talked about tick replay can play out differently live versus on the replay. That's why it's just replay. Latency. Okay, so another issue is that you will often run into high frequency trading edges that have competition. And so when you backtest it, it shows that it does really, really well. But then even if you trade it on sim, you find that you're just not fast enough to get them. I guess the motivation for testing with the built-in indicators is to show newbies. Yeah, you learn the basic tools, right? There's only like so many different ways to take a trade off of an indicator, you know, comparisons that you can make. Okay, another issue is excessive trading or threshold issues. So often you will get an indicator that it will get triggered over and over and over again. Like say you're doing a cross of a moving average, you might get into a situation where the moving average gets crossed like literally every bar, and your backtester will try taking trades off of those every time, and it may actually show you making money on that. But the reality is that the algorithm is taking way more trades than you expect. And when you start trading it live, that tends to not work out very well. Or you don't include the commissions on those ones, and so it shows that it's making money, but it doesn't when you add the commissions and the slippage in, right? Not enough edge. So another thing that you'll run into is that you will find an inefficiency in the market, but the inefficiency is so small that you can't really trade off of it. Like if it's a 1 or 2% win rate, that might just be random, right? Not a long enough data series. Oh yeah, so something I've seen a ton of lately, and I don't get it, is like I'll see people and they'll show me a backtest in NinjaTrader of like just over the past month. And I'm like, why would you only backtest it over the past month? Like, you realize that you can go and that test that you did, you could run it over 6 years and it would only take 5 seconds more, right? I've seen this a lot. You want to trade, you want to do the largest data series that your computer can handle. And you will use and then you can use a shorter data series when you're like backtesting and fitting and so forth. But then at the end, you still want to do a big backtest that is the largest data set that you can handle. A longer backtest with a 1% edge means it's more likely to be true, right? So, well, the larger of a data set that you have, probably the more reliable that the indicator is going to be. You can still curve fit over a long data series if you just trained it on a long data series. That's where walk forward analysis is useful. But you also kind of have to wonder, like, what is the threshold that something can't possibly just be coincidence or random? And I'm not sure what it is. I think it's more than 1% though. Because I've seen ones that were like 5% and then all of a sudden you started trading them, they didn't work very well. But what edge exists for that long of a time period? Well, so for instance, the kinds of edges that I try and trade off of are things that I can prove happen because of mathematical properties of the order book, right? I think that's a way better edge, is that there's something about the structure of the market that makes it happen. Whereas the explanation for most technical analysis indicators is that people are just that way, you know? Well, they're not that way, and especially since the market is like a second order chaotic system where just even making a prediction on what the system is going to do could potentially affect the system. Yeah, you gotta be careful with those. But I've found some that come out with like a 1% edge and they don't work very well. And this kind of brings you on the last one, which is like not considering the drawdown. So something that I find happens a lot is they'll show a backtest that shows a lot of profit, but when you look at the degree of the drawdowns, there's no way that any retail trader would be able to trade that strategy because the drawdowns are like hundreds of thousands of dollars. Yeah. When they already have been taken, so you can't find anything that backtests yours, I presume. Yeah, well, but that's where I'm saying that, like, sometimes you can find something where the edge has already been taken out of it, but you don't see that in the backtester. Like, because the margin on that can be so small, you know? Like, it may be that edge has already been taken out of the market, but it's like a one tick thing. And so if the one tick could just be the difference of getting filled in a certain spot or not, right? And the backtester says that you get filled in the real market, you don't get filled, right? That's why I'm saying like a 1% edge is kind of like, you know, how have we been? We should go back. We should go look at our trades. And then I got to get going. Because my, where is it? There it is, Journalytics. My stats as of recent have been, I've been doing pretty good, I would say, right? If we just do MES, I don't want to include the treasury trades because those are so much larger. And let's just go to the beginning of March. Have I had a bad day in March? No. I did have one day where looks like I did something and cheated maybe. But What is my win rate is what I want to know over this time period. Because I've been winning pretty high. Okay. So it's actually only 40%. But my winners are larger than my losers, huh? MAE, MFE, yeah. It's about 1.5 times my losers. Well, that's not quite what I would like them to be. If we just look over the last week, I would think that it would be even higher, right? 60%, yeah. Lately, I've been winning 60%. You're really good at remembering all that? Well, all that stuff I had written down in a spreadsheet. I was going to go into more detail on them all. Yeah, I have a little Google document open here. All right. Oh, that's funny, man. But so I'm sitting here looking at this and I'm like, over the past week, I've gotten 60% and 75% on my shorts, which is pretty crazy, right? And I'm wondering, like, how am I doing that? Because I was like, if I can hit 70% on equal risk reward, that's really good. And I like, how do you do that? And when I tried practicing that sort of thing, I couldn't do it. But then I started looking at the market in a certain way and I'm like, oh, it's doing so great. And sometimes I'm not even sure how I'm doing that. Like, there's like a principle that I have in my mind, yes, but like sometimes I'm like, am I really applying that effectively? Like, how am I don't know, man. I'm a little weirded out. If I can keep that up over a month, then maybe we might have something. But that is a little bit like, that's like really good performance. I don't know if I'll actually be able to keep that up. Well, you're good at making it seem like you weren't reading. Well, I just looked at the thing and then I was like, oh yes, and that was this. Yeah. I don't know. I need to get like a teleprompter because one of the issues that I'm having right now is that like time to actually record is precious. Like, and if I can speed up the process so that I can put more videos out, that's where I really think that to grow this channel, that I need to put out more one-off videos. And I probably should be putting one out every week, if not multiple times a week, you know? Clutching his head in today is the 29th of March. Oh, that's funny. Okay, so yeah, check me out on TikTok. I'm gonna try and do Steve on TikTok. There, you know, leave your comments on this video. Make sure you hit like. We got 25 likes today, 25 concurrent viewers. Wow. Hey guys, thank you guys very much. And yeah, be careful. Again, I think that the flow should be pretty effective in this market environment. But I would also be careful about how much you try and make things run, right? You will get some good runs, but when you see some absorption or you just see it struggling to take a thing, like that's where I would just be like, oh, okay, like the best part is over and just take the easy part of the trade and be careful about those reversals. Like let it reverse a little bit first, because you're very likely to run into situations where the size of the meta order is so large that it's having difficulty continuing to move the market. But they're still going to continue selling. Okay. So when you see that absorption, don't just think, okay, reverse this. That's my take on it today. All right, guys. I guess that's not advice. I be careful about what I say. I'm like super paranoid about it now. Stay profitable, friends.